should be able to record it.
Yeah, okay, perfect. Thanks, Clint.
Do it, but I think you're gonna need to do it again though when we actually start the webinar.
Oh, really?
Yeah. Hey, Candy, I'm gonna start in like a minute. Okay. Or I can start it now if you want.
Yeah, we're 2 minutes, less than 2
All right.
minutes.
You guys ready?
Make
Uh,
sure right at the stroke of 3, we let people in.
I think once we start the webinar, if they click join, they go into a waiting room until we actually start the webinar. But I think if we start it now, instead of going in the waiting room, they'll just see us talking. So just be aware of that. As soon as I start, anybody who's in the waiting room already or who's filtering in is going to see us. So
Yeah.
you want to take about 20 seconds to kind of relax, and then I'll start it.
Pick your nose, do what you got to do.
All right. I'm
Thank
gonna
you,
do it for
Will.
fi-
No one else laughed. No one else laughed at that.
I'm over here. Hey, that's a great idea. That's
All right. All right. Let's go 5, 4, 3, 2, 1. I'm gonna start.
Welcome. Welcome to Candy Start. I have a fabulous panel here right in front of us of property tax experts. Now, I'm sure you all are like me. We just got our tax bill in the mail shortly, probably 5 or so days ago. I left it in the kitchen. I didn't want to look at it. I made my husband look at it first. I've been hearing that people have been collapsing when they've been getting their bills because they're huge. I am actually also running for Dallas City Council. Here's my little shirt right here. I'll just show you, Candy Evans for Dallas City Council. And every single homeowner I'm talking to is talking about property taxes. And we're hearing, my opponent is saying, and some of the other candidates are saying, you know what, we've had the biggest tax cut in Dallas, the city of Dallas, in 40 years. And I'm not feeling it. No one's feeling it. And here today, we're going to talk about that property taxes, what's wrong with them, how we all need to protest them, how you can do it yourself, or how you can go to some experts to do it. But we're going to learn the tools that we have to do, because guess what? We all have to be armed to do this if we live in the state of Texas. Is that not right, guys?
You said it.
You got
That's
it.
absolutely right.
Thank you. So let me start with Glenn. Do you want to introduce yourself?
Yeah, my name is Glenn Goodrich. I run the firm propertytax.io. That's actually our domain, www.propertytax.io. And we represent homeowners lower their property tax every year. So that's what we do. Thanks for having us here, Candy.
Thank you for coming. And down below, we have Will. I'm going to go that way and come to the center first, back to Jim. There's Will Wiggins.
Thank you, Candy. Thanks for having me, Glenn. Thanks for your invitation. Yeah, same. Will Wiggins. I'm with North Texas Property Tax Service. We've been around since 2003. We specialize in Dallas and the northern counties in Dallas, DFW, so Collin and Denton, and in Dallas and Tarrant, of course. And same thing. We like to help people lower their property taxes and assist them however we can to sort of relieve some of that burden you're talking about.
Perfect. And last, but of course not least, is Jim Goodrich. And you will notice there's a similar last name here going on because we have father and son. We have a duo fighting property taxes. So Jim, introduce yourself and we'll take it off.
Yes, guess which one I am, father of the son. So I'm Jim Goodrich, and I am a real estate appraiser, been in the Dallas area for 30 plus years, and also Glenn's partner with propertytax.io. I happen to do the commercial protest, and Glenn usually has more than he can handle, so I help him out with the residential as well. So I'll be your moderator today. So I've got the easy part. I've got to pitch these guys questions, and I think you're going to be in for a real treat today. I really do.
So terrific. Well, so first of all, while we're all picking ourselves up off the floor, why do we have such high property taxes in Texas? This is one of the highest states, by the way. You know, people come here, they move
Right.
here, and they say, oh my God, your real estate is so affordable. Then they're hit with the shockaroo of the property taxes.
Yeah, I saw that article that Candy Start published, I guess, a few weeks ago that cited another publication, I guess, about how Dallas area is like one of the worst places for taxes in the country. And I mean, I think that sums up exactly why you're seeing a big battle in Austin right now, legislatively, between the House and the Senate, because I mean, our property tax system was designed, decades ago, whenever we weren't seeing, 20% increases in value year over year. And so the tax bills are relatively in check, and it's gotten out of hand. And now we need to kind of change our system, which, you know, our lawmakers are looking at doing now. But I mean, also just a vast majority of people don't even protest their value. So there's two parts of the equation. There's the value and the rate. And we have power, some power over the value of our property. And so more people need to be engaged in that part of the process. And we're going to focus a lot of what we're talking about today on the protest part of the process. But Candy, you know, you're running for city council, and you're hopefully going to be in charge of the rates part of the conversation. So we can get into that a little bit too, because I mean that's becoming increasingly more and more important.
Chop, 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 chop. So,
Yeah.
thank you. Thank you for answering that. I think that you're right. When the system was designed, homes were way more affordable here.
Right.
Yeah. I bet Jim can offer some insight onto that, because I know when I moved here, homes were a lot more affordable.
Well, they were, and I would just kind of tag on to what Glenn said. You know, we had some really landmark legislation 2 years ago in the Texas legislature called Senate Bill 2, and that really put a lot of checks and balances on the property tax system. We haven't really seen the full effect of that, but I will say I just got through doing a class this morning, and we talked about property taxes and rates being a teeter-totter. When one goes up, the other one goes down. That's not showing up real well, but when the values go way up, legislatively, the tax rates have to go down because there are limits on what the cities and schools can actually take in now. So we've got a pretty good system. We just need to give it a chance to let it work. And I think that's what Dan Patrick's position is. And there's other schools of thought as well.
You know, Candy, Will actually has probably interesting perspective on this, because Will, you used to work with the appraisal districts, right?
Yeah, that's right. Yeah.
Yeah.
I started in land development and planning where I came from in Colorado, and moved into assessment when I moved down to Texas about 10 years ago. I got a job working as a commercial appraisal for Travis Central Appraisal District, and I was promoted into an analyst manager and all the way up to assistant director at Travis Central there in Austin. So became very familiar with the Texas style, I suppose, of assessment. And I guess I'll just answer that question too, Candy, that when I got down here, a little tidbit or kind of it's funny, a story to me, anecdotal, but when I came down to Texas, I thought that Texas, you know, being born in Texas and growing up, my whole family coming from Texas, I thought was a relatively conservative state. Well, when I found out that they got 8%, that the taxing entities were allowed to go up to 8% increases on their budgets without a hearing, I thought, well, that's incredible. That's a lot of money. That's a lot of increase. And even where I came from in Colorado, it was limited to population and inflation, or capped at 5, you know, so you could have those two, but we're going to cap you at 5. And that even came from Colorado. I came down here and thought, golly, they get 8%, huh? That's a lot. And so anyway, to see the most recent legislation cap it at 3% without a hearing, I think that's the right call. And I'm looking forward to seeing how compression works.
Good. Do any of you ever think that we might, first of all, let me backtrack. Is this an equitable system? Is it equitable for homeowners? Or do you think there's more of a burden on homeowners than there's commercial property?
I mean, look, there's way more data for residential properties out there than there is commercial, like through the MLS systems. And a lot of people don't know this, but the appraisal districts have access, or most of them have access to the MLS system, so they know what properties are selling for. There are systems like that for commercial, like CoStar, but nobody really inputs in sale prices into CoStar. So they have a lot more data to work with for residential. They get pounded. As a general rule, I say that residential properties pay, 95% or higher of their market value, and commercial properties pay like 70% of their market value. So in that regard, it's not equitable for homeowners. And just, you have issues now. I mean, there's kind of it's not really funny, but for lack of a better word, I call it a joke, that there's this new exemption that exists, which is I've owned my home for more than 3 years exemption. And that's because you've been somewhat protected by the caps with these huge increases. If you purchased your property in the past 3 years, people are wondering, well, how did my value go up by more than 10%? And that's because when you purchase your property, you're not eligible for that 10% cap the year after the purchase. So if you've recently purchased your home, your values, your taxable value is going to be way higher than people that have owned their home for more than 3 years, because they've been somewhat protected by that 10% cap. So in that regard, it's really not equitable either. For every time you buy a property, you're losing cap protection, and now you're paying more. So we got some issues we got to work out with equity in our system for sure.
Yeah, that, and I'm really interested in that. Guys, you want to chime in?
Yeah, I'll take the ball,
Yeah.
on that one, but I'll keep it short for sure, Jim. I know you probably have some comments too, but one thing too, Kenny, I'd say is that when I became director, it was kind of like I got the big picture. I thought I was a big shot for being a commercial appraiser and knowing how to value things on income and how to do a band of investment for cap rates. And that is all fun stuff for appraisal. And I do love that stuff. And I love those studies. But when I became the assistant director, Travis, I realized, holy cow, the tax basis is residential by far. Like the people paying the taxes are in the homes, they're not in the commercial. So to me, the discussion of taxes is only ever about the homeowners, and that's where it should stay. I mean, I think the commercial guys, commercial real estate investors get a pretty good deal with some of the laws that are in place. And to answer your question, I'll tell you this, Texas is one of the only 5 states that has a provision to protect the taxpayer against unfair taxation. And that's huge. I mean, we just really need to cradle that and make sure that that stays in place, because it's in jeopardy with things like caps, as Glenn mentioned. We gotta, Texans believe that we are taxed according to value. And anything that takes away from that, anything that takes away from the pursuit of what the value is, needs to be challenged for sure.
Good.
Mhm.
Jim, you had
Yeah.
one to add to that.
I don't really have anything to add, really. I think they covered it pretty well. I just want to mention to Will, maybe somebody chatted in, said they couldn't hear you very well. So
Oh.
maybe just speak up a tad more. I can hear you just fine, but
Okay.
just keep that in mind.
Okay. I
Or
can
maybe
do
get closer to the microphone, maybe.
that. I can do that. You bet.
So I didn't really have anything to add really to that, Candy. I think they pretty well covered. Residential for sure is easier to value. And I think I agree with Glenn that they cover pay much more of their fair share than commercial. I happen to do commercial protesting for people, and it's not uncommon to see a property sell for 1.5 times, maybe even 2 times what it's on the tax rolls for. Just
Well,
because
and
it's
also-
much harder, the data sources are not out there.
Well, and also the commercial firms, the commercial properties are all represented by agents,
Hmm.
and they're constantly protesting every year and through those firms. And a lot of homeowners are unrepresented, or they're not filing their own protest. And so there's that regard also, that it's a business operation for the commercial properties, and for homeowners, it's more of like, do I feel like protesting this year or not? And I think we're in a point in time where it's just, we need to be protesting every year and keeping the value part of the equation in check with the appraisal district, and not just rubber stamping what they think the value is. Because the commercial properties hire professionals like us to challenge that value every year aggressively.
Right, that's written into their business plan. That's not written into every homeowner's business plan.
Right.
But one of the things we try to do at Candy's Dirt, and what we want to do with today's seminar, webinar, is that we want to give you the tools to do it yourself, because you don't have to hire a professional. You can do it yourself, but we'll give you the tools for that. So onward and upward. Okay, so guys, what's the next step here with, should we talk about what's going on in Austin right now?
Yeah, we can
Well,
do,
we-
let's cover.
Yeah.
Go ahead, Dad. Go ahead,
Sure.
Jim.
Yeah, we have been talking about that a little bit. There's basically 2 competing versions. There's the House version. It's just funny. It's not Republican versus Democrat. It's House versus Senate.
Yeah.
And the Senate is 100% behind their proposition, which is to raise the homestead exemption for schools from 40,000 to 70,000, which will help all homeowners. Another exemption for seniors, and there's some other fine points that are probably more in the weeds that we want to get. And then the House has got something that's kind of interesting. They are proposing a 5% cap on all real estate, including land, commercial buildings, houses, and that sort of thing. And I've heard that described as, it's kind of like cotton candy. It looks really good and it tastes really good, but it's bad for you. So I'll just leave it at that and let Will and Glenn comment further on that. And Candy, I'd be interested in what your comments are too.
Yeah, well, go ahead. So are you on the same page with that, or what do you think?
Yeah, with the cotton candy, yeah, I wrote a memo and I called it the garden apple in the garden, as it looks really good, but it actually is really bad. And so the whys, again, I'll stay out of the weeds of it as well. I can just tell you that if we are concerned about fairness in taxation, as the Constitution of Texas is fervent about, and people, I know people are concerned about that, then this may look good right now, but it turns really bad. If you ever want to move, or if you care about, again, the common, if you care about the common, and there it is. I mean, if you are one of the residential, as I say, then it's important that the only hope that we have of paying fair taxes is just that the appraisal districts get it right, and that they value things correctly, and people pay. I don't think people have a problem paying their fair share. But when things get out of whack, and the same product is paying half of the taxes as somebody that just like them, it promotes sort of a distrust in the public. And I think we really need to stay away from that. We really need to ascribe to, quality appraisals from the appraisal district. So instead, they should be pointed towards more quality control, and making sure that appraisal districts are held accountable, rather than dipping fingers and taking away from fair market value. I'm a fair market value purist for sure.
Very cool. Very cool. Oh,
I would just add that, we were talking about inequity between commercial and residential. And, there's an old saying that in legislation, there's just trade-offs, like there's really no just clear cut great answer to something. You're always, trading off one thing for another. And I mean, if you're going to talk about 5% caps across the board for commercial and residential, who do you think the winners of that proposal are going to be? It's going to be the commercial property owners that are already, aggressively pursuing reductions and getting a good deal. So I just, and if we're talking about radically changing our tax system with the 5%, where's the financial study to prove that benefits families and homeowners? There is no financial study because they can't prove it. So it was very premature to even propose this on the House floor. It's one of those things, like, I'll say it again in a different way. It sounds great, but there's no substance to it, and it actually hurts homeowners.
and they
So
tried.
I like the Senate bill. I like the Senate bill.
Yeah.
Well, they tried this in California too. And California does have lower property taxes than we do, though.
They do, but who goes after that system as unfair is the progressives. They say that, businesses don't sell their properties nearly as often as residential property owners do. A commercial property will sell, maybe never in your lifetime, or maybe every 20 years. So go ahead, Will.
Well, I was just going to comment that, when we go by comparison on California, you got to keep in mind too that they're in a serious deficit as well, and they also have an income tax, and that is not. Those are other big issues that are not. We don't. That's the thing, is if it ain't broken, don't fix it, and we're running out of surplus right now. So and the problem is not limiting. I mean, if you want to control taxes, you control it on the budget side, because what's left is valuation, and valuations should be fair and equal in this case.
And I don't think anybody looks at California and says, let's do it that way. In fact, they're looking at that and being like, oh, let's learn the lessons of what they've done wrong.
Yeah.
And I don't know why we're doing this. I don't know why the House Republicans decided to look at California and be like, let's do something along those lines. It makes no sense.
No. Well, let's talk about the Senate bill, because that's the one, I think you guys all agree that one's pretty good.
So, and I'll go first here. You want to start to jump in there, but the thing is, and some of the critique is that you'll hear again is that it's regressive, right? And we know that it's got a flat tax component to it, in that there's a level benefit, and that helps a guy that's in a $200,000 home. A $70,000 exemption is really helpful. Well, again, that's the majority. Let's keep in mind here that is 95%, if you will, of that residential tax base, and those are the Texans that we're talking about. So if it helps them, great, no problem. And frankly, for the others, it's still the same amount. So there's still that element of being fair. You're still getting the same amount of exemption, even though it might not affect yours, at your $1 million home as much. Again, I think there's a fairness component to it that is much more easier for me to digest than the calamity of the variance in capped values.
Hey, Candy, I saw a question about this in our chat. If you wanted to ask it real quick, it's like, why is it bad to limit the increase to 5%? What am I not understanding here?
Mm-hmm.
Okay, I don't think we fully have addressed valuation. Taxable value is just one side of the equation. By law, like the city, let's just take ISD, for example. Okay, DISD, Dallas School District. By law, they can increase their revenue by 2.5% every year. Okay, and that means they can take their taxable value and they decide on a tax rate, and whatever that tax rate decides to be, they're gonna take last year's revenue and add 2.5% to it. Okay, so if we add 5% cap, all we're doing is decreasing the taxable value. Well, they're just going to increase the tax rate to offset that. Right. So your tax bill has no impact at all by limiting the taxable value. And you got to understand that what's proposed is not just a 5% on your homestead, it's 5% on across the board, commercial and residential. So now you're going to start giving benefit to commercial property, which is going to shift more of the tax burden to homeowners.
I see
So
that.
it's the 5% cap only addresses one side of the equation, taxable value. It does nothing to rein in the budgets with the taxing entities that Senate Bill 2 that went into effect in 2020 did. So they're just going to offset that taxable value suppression with an increase in the tax rate, and it's going to have a net no effect. It's going to be one of those things that feels good when it passes, but it does absolutely nothing for your tax bill. And except for hurt it, because now commercial owners are going to see the benefit from a cap.
Interesting. Someone else is asking thoughts on Collin Central Appraisal District not using the closing disclosure as acceptable method to assess value. Can you guys just talk about that?
Why don't you take that, Will?
Sure. Yeah. Well, it was the first time I'd seen an appraisal review board or a appraisal district for that matter sort of disregard a fair market or an arm's length transaction and sort of take claim to the time adjustments and sort of evoke in the testimony that, you know, over the third and fourth quarter, you know, that sale price is not indicative of market value because the third and fourth quarter were so strenuously, you know, there's so much growth. And so it's the first time I've ever seen them take that position, and it's a bold one. You could say it's accurate, but if we're going to go there and we're going to open up market adjustments or what's known as time adjustments, market adjustments in appraisal theory, then you better make sure you're doing it right. And you don't get to blanket the whole county at some number that came from some report. I mean, you know, what we have to do as appraisers is dig in on any assignment and make sure that it's specific to that property and identify the appraisal problem for that property. And so what should have been appropriate is, you know, they had some substantive evidence that showed for this neighborhood and over this time, and here's what it was since then. And maybe I could substantiate that. But if you do that, if you open Pandora's box, then you better get ready for it this year, because I'm coming after them this year with the same argument, boys. Like, that market's been falling, so I don't want to hear about, you know, it sold in May at 500. If it sold in May this last year at 500, then a lot of those pockets and a lot of those markets, at least on my side, are going to get the argument, well, then it's less than that according to your theory last year. So
Hey, Candy, can I put my 2 cents on this? And then we
Yes.
actually have a chart. That I think we probably need to get into before too much time passes, that Jim has of like the market decline that kind of Will was alluding to with time adjustments that we're requiring. But from my experience in Collin, for years, they've never just accepted closing documents. They always say, well, do you have an appraisal that you can submit with that? They have just not, it's not good enough for them just to have a closing disclosure. They want an appraisal that was done on the property as well, especially if it's new construction property because of contract dates. They could have contracted that price a year, 18 months ago. And they're saying, well, what would it sell for today? You contracted that price 18 months ago, but what would it sell for today? So that's one reason why they don't take closing disclosures. And honestly, Collin is kind of unique in this. I mean, I'm trying to find a way to say, I do respect the job that Collin County does. I have to preface what I'm about to say with that, because I'm walking a little tightrope here. But Collin County is much more aggressive in rejecting outside information than any other county I work in. They really think that what they produce internally is probably better than what anything else that they're going to receive externally. So that means I don't care what you just paid for your property. I want to see what it actually would appraise for. And that's a legitimate stance to take. But then you provide an appraisal to that, and then they start beating up that appraisal. They say, well, we've got different quality ratings and things like that. I get where they're coming from, but at some point you got to throw the taxpayers a bone that they're doing their homework and doing their job, and kind of give them the benefit of what it just sold for. But that's why I don't see them accepting closing disclosures, is that they want an appraisal with it. And even if you have the appraisal, they're going to start beating that appraisal up because they have their own internal data, like building quality adjustments, effective years, and things like that aren't on appraisals. So it's not quite as easy as it used to be in Collin County, and really any county that we work in. I think when you saw the 2008 crash and you saw a lot of fraud that happened with appraisals, that kind of changed appraisal districts' mindset towards appraisals in general. And there's a much more scrutiny applied to even appraisals that are done by third parties now.
Yeah, this is true. But what chart did you guys want to, or Jim, did you
Okay.
have?
Yeah, we're going to get into, I think you're going to see, we've got a series of graphs here.
Good.
And I'm going to pitch this to Will and to Glenn, let them talk about it. And is it okay if I share a screen now, Candy?
Oh, please do. Thank you.
Okay. All right, is that Case Shiller graph showing up there, Glenn?
Yeah, you know what? I just got a
Okay,
note.
so-
I got a note also from Shelby, who's kind of in the background watching us, and it's a good point. So I just want to say this before we get into that. A lot of people tuned in to also hear kind of like the basics of filing a protest and what we do. So let's keep that in mind time-wise and make
Yeah.
sure we focus on those topics. So maybe let's kind of spend a couple of minutes on this and then
Yeah.
start answering some of the meat and bones of that topic.
Yeah, and let me just say that Glenn and Will are consultants that are absolutely at the top of their field. And so what they have to say, I mean, we could be here another 3 hours and they'd still have more stuff to shoot out. So
Yeah.
I'm going to ask Glenn and Will to be as concise as you can. We spent a little bit more time than we thought we were going to spend on the political part of this, but that's okay. That's important. So Will, set the table for us here.
Yeah,
What
great.
is this graph? This is a Case Shiller graph. What is that saying to you?
Yeah, I think, overall, Case Shiller really just looks at over time and adjusts for inflation and things like that. It looks at the trend, I would say, of the U.S. housing market. And so, pretty obvious here that over the last 10 years that that's been on a steady increase. You see a heavy increase there in 2021, and we all know why. I think that, limited supply and low interest rates, and really, especially in Texas, I think we saw that where, the job economy is so thriving, and it was just a case of limited supply. You had a lot of people moving here, and that drove up prices, and we still see effects of that. I think most recently is really what's peculiar. Let me move you guys screen over here. Yeah, so isn't that funny? I slid all the faces over, and bam, there's the there's the peak right there, right? So why is that? I think I know myself. When you talk about wanting to build your own home or things like that over these last 2 years, you get hit in the face with construction costs. And and people, I think, again, have grown sort of skeptical, and you talk about supply chain issues and shortages, and that really did spike that demand. So what is this here? What is this in response to this peak and this fall? And you look even closer in the DFW metro, as I stated, I think in the third and fourth quarter of 2022, we saw the same thing. So a lot of skepticism in the market, and sort of finishing out what I think, the great insurgents, a lot of doubt in terms of national forecast, Ukraine being involved, and you've got questions of the dollar and the strength there too, and now we got banks in the media too. So I think a lot of that stuff does its work to sort of inhibit consumer confidence. But as far as local markets go in Texas, I don't see us. I'm a big believer in terms of Texas and the policies that they've put in, and how we'll stay the course here. And you always see it right about that time. So whenever a forecast or the extrapolation of any econometric goes beyond the real, then it gets real volatile. So, but I'm confident. I wouldn't let that downturn scare anybody.
So, well,
Good.
the downturn actually plays right into our hands, is what I was getting at there. This is the first downturn in this 10 years. And that's something that, Glenn, I'm going to put up another one and get you to speak to this, if you would. This is a graph that you created, I think, back in February. And I'll just let people look at this for a minute. On the horizontal axis, we have time, and it starts at 2018. On the vertical axis is the median sales price, and it's 5 different counties. So, Glenn, what is that saying to you? And what is the significance, more importantly, of this graph and that peak in the fall to property tax protests this year?
Well, I would ask people to focus on like the last 25%, like the right side of the chart, the last 25%. The problem that you see here is like the big spike that happened in June and July. That correlates with when the most sales happened. So what we're looking at is, you have to understand, like, mass appraisal is done. There's like a data gathering process, and the time frame that they gather sales from is typically like March, April. I'll just take 2023 as an example. March, April of 2022 is when they start collecting sales, and then they go all the way typically to sometime in January of 2023, and that'll make up the data sample of properties that the appraisal district will be gathering for their valuation, for their 2023 valuations. Well, they're collecting data during the peak of the market, and all the sales are happening at the peak of the market. And so I think the notice of appraised values are going to be lagging in the market a little bit. They're going to indicate values that they collected during the peak of the market. And also, this is a very common adjustment that's done. I mean, Jim, you're an appraiser, so you do this all the time. When you're doing an appraisal report, is a time adjustment. Well, a lot of appraisal districts don't do time adjustments. Basically, the concept of a time adjustment is if a property sold, and if you see this red, on the left side, if you see this red dotted line that indicates the peak of the market, if a property sold at the peak of the market, what would it have sold for in January 1st of 2023? Well, it would have sold, probably 10 to 15% less. So if the appraisal district is not making a time adjustment, that means they're inflating the indicated value that comp shows for your property by at least 10 to 15%. Now, if it's sold in September or October, it's not a 10 or 15% drop. It's probably more like an 8% drop. But still, the point stands that all the sales are probably going to indicate a higher value than it should, than what the property would actually have sold for in January. And so that's going to be a big battle that we're fighting this year. The challenge that we have, I mean, this is just what's in our playbook. So if you're a property owner and you want to protest the value yourself, and the appraisal district throws out a comp that sold in June of 2023, my first rebuttal to that would be, maybe screenshot this graph that we're showing in this webinar and just say values have dropped since then, and so you need to adjust that sales price down, 10 or 15%, and then let's talk about what my value would indicate. But if you're not making that adjustment, then the value is too high.
Yeah.
You know what? We'll
So-
publish this on Candy Sturt in case you guys didn't get to take a shot of that. Is that okay, guys?
Yeah. perfect.
Sure.
Perfect. Thank you.
So that's great, Glenn. I'm just going to go back and summarize real quick. Here's the Case-Shiller. You show the drop right at the end right there. That's the most widely watched index in the real estate markets.
Right.
You see here, all counties are showing this same pattern, big drop right there. Here it is with a little different perspective on it. So Will, this is your graph, and
Yeah.
I think this is a very interesting graph. I'm not 100% sure I'm interpreting it right, so I want you to talk about that. What is that graph saying to us?
That's the best thing about a property tax consultant, right? Is to throw all the information out there, and I'm pretty upset. So there's got to be something wrong here. But I'll tell you what my interpretation is, and I'll just comment. Look, and again, for the listeners out there, to echo what they've said, and I hope what you caught there was the why, right? The interest rates were up, and the market got a little scared and intimidated. Buyers slowed down, and when it slows down, should I be scared too? So that's what we saw. And then of course it goes back to 4s and 5s, and it wasn't that very long ago when everybody was investing at 4 and 5 as well. So it's kind of softened. But again, look at the regional forces, look at the national forces. America's strong. Texas is strong. We'll be fine. And I don't want people to freak out about, that Case-Shiller turning down right there. But what do we have here is well, look, be advised that these bullets here on this Dallas County graph, these blue dots, that's the median sale price per year. And this is what I mean about the interpretation, right? So from 22 to 23, it's very easy for an appraisal district, or especially a rookie or somebody, to say, man, appraisals are up. Appraisals are up, right? But that's just the median. And that doesn't, when you tear it down, you look at this year's, it's actually come back down to a January. So, and I think we just saw that, when you look at third and fourth quarter of 2022. So we'll want to emphasize in your protests, you want to hammer like, hey, don't forget, that the interest rates spiked and value started coming down. So y'all got to give me credit for that, from sales or whatever in the middle of the year. So what I think is most interesting though about this, y'all, is this, and I didn't highlight it, but see that cap percent. See down there on the bottom below appraised where it says cap PCT, and in 2020 it was 4.5, and then in 2021 it was 4.1. And this is what Glenn was saying is, isn't that fascinating that in 1 year it went to 10.7 and to 10.5? And what does that tell me? That on average, everyone is limited. Everyone is limited to the 10%, which is fascinating. That means that market values have gone way above, and now all the homesteads have kicked in. And so what do we have is a bigger gap in between that red line and that green line over the last 2 years. And that's fascinating to me. It's not a big deal to me that the market value opinion is different than the blue line. I mean, they always come in underneath. We all know that. They're trying to be limit protests, and they always come in low, and they're trying to catch up. You see, they did a pretty good job of catching up last year when everybody went crazy, right? That's a pretty steep increase on market value opinion. And then they did a pretty darn good job this year too, because they're still playing catch up. But even though they're catching up, again, I'd reemphasize that, hey, over the last third and fourth quarter, which is most important in 2022, that the January 1, 2023 values are a product of a falling real estate market. And so In
So
conclusion,
those are annual medians, right?
annual medians, yes, sir, right up
Okay.
above there. Yeah, you
So
got
I
it.
agree. And I think what Will's saying is that this graph shows one thing, annual median, but really
You're right.
this is this is the focus. That's where your comps are going to come from.
Yeah, that's it.
So that's great. That's a great chart, Will.
Hey,
I
hey
wanna go
guys,
back
I'm
to what-
seeing, I'm seeing a lot of questions about kind of dialing it back and simplifying it. Like maybe we take maybe let's just talk about if, let's pretend that we're just homeowners and with our knowledge and what we would do to protest our value. Because this graph that graph that you were showing just basically shows what we were already saying, which is most of the sales happen at the peak of the market. So if you're wondering, is my value high this year? I think probably just based on that information as a blanket statement, it's definitely worth pursuing a reduction on. But so if I'm a homeowner and I'm just protesting my value, here's what I'm going to do. Okay. And you can hire a firm like mine and Will's, and that's the easy button. Boom, easy button. Firm handles it for you. It's automated. Here's what that experience is like. You sign an authorization document. As soon as you sign the authorization document, we file the protest for you. Will's company does this too, and Will can probably put his own spin on what they do, but I'm sure it's going to be exactly with what I'm doing. It's not unique to my company. We file the protest for you. Then we submit. Then we get into a negotiation phase with the appraisal district where we're discussing information like comps and things like that. Recent sales in your area, and we're making adjustments to it. Hey, this property sold next door to my client's property, and it's larger, so I'm going to make an adjustment for that. It has a pool, so I'm going to make an adjustment for that. In other words, the adjustment means my property would sell for more or less than this property based on those factors. So if it's larger, obviously that property is going to sell for more than your property because it's smaller. People are going to pay more for a larger property. So you need to reflect that. So that's why you can't just take price per square foot. I know I'll let Will probably take that part of the conversation because we're both passionate about that, probably equally so.
Yeah.
So price per square foot is a bad strategy. And if we do that, since we're professionals, we get laughed out of the building. They're a little bit more forgiving of homeowners because they understand you don't have the expertise that we do. But Will, what's the problems with price per square foot? Because we see that a lot, especially realtors, but it's not a good strategy.
Yeah, well, I'll start there. And in Dallas, you might be handcuffed to it because in Dallas, their analysis in the defense hearing does boil down to, as you know, price per foot. It becomes a price per foot game, and all they got to do is put up two smaller comps, and you lose because they're not making adjustments for economies of scale. So you got to watch out for that. But you can, as realtors, they like to talk about PSF2, and that's good to do, but you got to make sure you make adjustments. And most realtors know that. But when you hand over a CMA to your clients, you got to tell them, hey, be cautious of that PSF, and you got to same with what Glenn's saying in your hearings. You got to.
Okay,
watch
let's
out.
define CMA is a.
Yeah.
Let me ask you guys a question. Let me ask you a question. CMA is a comparative market analysis. It's what I know. We have a lot of real estate agents online here with us, and CMAs can be great. But Glenn, I've heard you say something about a CMA, so I'm come to you first, and then we'll.
A CMA is just a tool that the realtor uses as a conversation piece with their client. The realtor is actually doing a verbal analysis with their client. I don't think realtors really list their properties based on what the CMA does. It's just a way for them to kind of get more raw data, and then they kind of massage it with their conversations that they have with their clients. So it's not a knock on realtors' valuations. But it's not a CMA alone has a lot of issues with it without a realtor being there to explain why this property would sell for more or less than your property. So, and PSF is price per square foot. Will was just using the abbreviation for price per square foot.
I'm a government guy. Acronyms are everywhere.
Yeah.
So that CMA really, the realtor is actually the bridge between the data, which is all the CMA is, and the analysis. So.
And I see people doing price per square foot, not only just for recent sales from a CMA, but also like my neighbor's house is price per square foot, lower than mine. And again, they're doing adjustments on those also. So I'm sorry, Will, go ahead and take over what you were saying.
That's okay. No, I hope to explain that to people. Just be cautious with them and make sure you make adjustments for not only pools but size as well. And I'm aggressive. If I'm outside of the 3% size range, then I start making size adjustments. But but that's not everybody has to do. Look, I'd give you my tips for those that are watching. And when people ask me like, hey, can you help me out, or I want to do it myself? And here's what I tell them is that, well, number one, don't mess around with the deadlines. Understand when your deadline is and because they won't compromise on that. So number two, you're probably going to be hit with an offer. Be skeptical. Okay, it's an automated offer, and if it shows a reduction, then they just throw it out there to you, and you think it's great because you're getting a reduction. Maybe there's more on the table, and and I wouldn't end there because it was easy. So be skeptical of those offers because they're usually not very good.
But Will, let me just dig in there a little bit. You know, and I'm bad about this as an appraiser. You know, we get married, we think our data is so good. You shouldn't put your feet in concrete on your opinion, should you?
Absolutely not. No, I mean,
Yeah. So you're usually not going to get your number most of the time.
that's true. Now, that there again, that may be what makes Glenn and I so good, right? Is we stay up late nights and then we come to what we think is true, and then we go fight for it. We get to go.
Well,
fight
what Will
for
and
it.
I have done is effectively reverse engineer the appraisal district's systems.
Yeah.
So, I mean, we've invested lots of time and money into our software.
Yeah.
And I mean, Will's company is excellent at this also, you know, and my company is very good at it also. So we have a more sophisticated understanding, and that's the benefit of hiring a firm. I mean, a firm like ours, I should say, there's firms that use price per square foot out there. They don't do any better evidence than what you could do yourself. So that's a question, is what does your evidence look like? If you're going to hire a firm, what does your evidence look like? Steer clear of flat fee companies, especially in a year like this, when, you know, you've got your market value way up here and your cap is down here, and you get your market value down there and you've paid somebody $250, but you've saved no money. So don't go with a flat fee company. I'm not saying you don't have to go with my company. We charge a percentage of the savings. I think, and so does Will's company. They charge a percentage of the savings.
Yeah.
That fee structure makes sense for you, and it makes sense. But in years like this, you know, we work a lot of cases for free. That's the cost of our business, but don't make our problem your problem by paying a flat fee to somebody, basically. So if you're going to hire a firm, that's just one tidbit to steer clear of. Hey, Will, besides sales information, if you're doing it yourself, what would you be doing?
Sure.
You know.
Yeah, great. Well, it's two points that you led me into there, Glenn. And one of them, I was going to say that next one ties into what you and Glenn were talking about, is do your homework. So get your sales from your realtor, but don't stop there. Look at other houses and see what they're being taxed at. Okay, because that's a big piece of the party too. And I think that's a valid argument, you know. And they'll figure out the rest. If you bring them the goods, hey, this house just like mine, and so is this one, so is this one, so is this one. They're all being taxed at this. You know, they'll know whether or not that's a valid argument. So do your research and bring that information in, and then bring the sales in that you think are, you know, would help your case there too. So, but more importantly, I was going to say too, is get the evidence from the district. So before you have your hearing,
Right,
get a copy of it so you know what you're going up against, and you can look at that and understand what you're up against there before you get in there. So beyond that, the one key word here is atypical, guys. So mass appraisal system is about distribution, and it's a lot of assumptions about keeping up with the Joneses. And these days, I'm sorry to tell you, most of the districts I see take that theory and they inject it to everybody. And what does it mean? We're going to take all these sales and we're going to assume that everybody's keeping up with the Joneses, so everybody's at the sales. And now the burden of proof has shifted to you. And that means you have to come and disprove that you are updated and painted and have new HVAC and you have new roof, and you have to come in and show that now, because they're assuming otherwise in a lot of cases. So I think when you come in prepared with that information, that's a big help as well.
here's a set of photos that. Go ahead, Jim.
I was just going to ask you guys to comment on something that we touched on, but I think it's really important. How would you like to see, as a taxpayer, how would you like to see the district's playbook? How would you like to see their evidence packet before you even go in? So there's a way you can do that. So I don't know, either one of you, Glenn, if you want to take this, and then we'll come in next.
Yeah.
How do you find out what the district is going to use? There's a method for that.
Yeah, there's a provision in the tax code. It basically is referred to as the 14-day evidence request, which is first of all, you have to file a protest. That's step one. File your protest. I would use the online protest, like an e-file option. It's super easy to do and just gets it done. And again, just real quick on the deadlines. Dallas is going to have an extended deadline this year of May 21st. Collin County is going to be May 15th. I believe Denton County is May 17th this year. And Tarrant County was originally scheduled for a May 15th deadline. but Will, you notified us of this, that they had to extend that deadline to May 30th because of all the website issues that they've had. But in general, the rule is May 15th is the deadline, but it's kind of all over the place again this year, mainly in Dallas and in Tarrant. Dallas is behind because of the hack that they had last fall that Candy, your publication covered that. Yeah, so file the protest before the deadline, which is why I kind of got off on that tirade on the deadlines. Step one, file protest. Step two, you have to request the appraisal district's evidence at least 14 days prior to your scheduled appraisal review board hearing. And what that does is that locks them in to whatever they provide to you. They cannot alter that evidence in the hearing. So even if after the fact you have submitted evidence after they've already given you their 14-day evidence request, they cannot take anything that you give them at that point and change their data. So they're locked into what they've given you. They can't introduce new evidence in the hearing. What that does is it avoid, when you're able to review their evidence before the hearing, you can practice your rebuttal. Will and I are have done thousands of protests at the appraisal review board. And so we can do rebuttals very effectively on the spot with no practice. But that's because we have tons of reps at it. If you're a homeowner, you're doing this once a year, maybe. So get their evidence ahead of time, review it. You're going to probably have, what is going on with, I have a lot of questions. Take that opportunity to call the appraisal district. What does this mean? What does this mean? Don't ask those questions in the hearing, because when you show up in the hearing and you know what you're talking about and you have an effective rebuttal, that's going to separate you so much from anybody else that goes in there without a plan. So requesting the evidence is a huge part of the process for homeowners, especially because a lot of people get shocked when they go in the hearing. The appraisal districts have these $1 million technology systems and click, click, click. And all of a sudden the argument that you presented is blown up because of evidence that they produced. By requesting the evidence ahead of time, it avoids that surprise, and you know exactly what to expect going into the hearing, and it builds confidence. The more confidence you can project in a hearing to the appraisal review board, and you're not fumbling around and knowing what to do, the better. The
Let me
shorter
repeat
you.
Let me repeat
Go ahead.
that for everyone. You can ask for the evidence from Dallas County 14 days in advance, correct?
That's any county, and Will is showing up. Hey, Will, talk, because they're not going to see
Yeah.
you. So
Oh, yeah,
Will.
sure. I got to talk in order to see that's true. This is the section of the tax code that allows you, that Glenn was referencing, if that helps. 41,461. Gives you 14 days to get
Hey,
your.
Will, what's your take on just what I just said? What would you change? What would
Yeah,
you, how do you
no,
differentiate?
I think you're all spot on. I think the only other thing I guess I thought I would add, I did write down a note, was that the hey, bring in the they're aware of the last year's value, but they're not offering that. I know the board is, and sometimes they'll ask for it, but hey, tell them and remind them, if it was relatively close to what you think is true, and then bring in a newspaper, show them, when I say do your homework, bring in a newspaper that tells everybody that the interest rates are up, that the housing market was crashing, like put it back on them, like this is nonsense. You don't know about the assumptions that they're making. You don't understand them because they're too complex, and that's the way it is.
You could just show Candy's dirt on your phone.
Yeah, or that, there you go, right there. That's right.
Yeah.
Say, look, yeah, that's right. You know who this is. She was saying the same thing. So, so I think that's important.
Bring the
to show
graph
them.
in.
Yeah, yeah.
Bring the graph in. So,
Yeah.
Will, let me ask you, when we're talking about the hearing, let's stick to one thing here. There are some do's and don'ts in the hearing, and there are a couple of things you can do in the hearing that are guaranteed to get you a big eyeball roll, which means they're totally tuned you out. And there's a 5-letter word that I think Will has taught me this a few years ago, that you should never, ever use in the IRB hearing.
That's
What
right.
is that word?
It is taxes. Yeah, don't talk about your taxes.
But I thought that's what we're doing.
Yeah, nobody cares.
Aren't we
about
protesting our taxes?
You said it. You said it. One word. Wipe out that taxes word and replace it with value. That's what
Okay.
we're talking about, is value. You bet.
Okay.
Good point.
So what are some things that I know Glenn sees these in his chat line, and Will, you do too. The homeowners always want to come in and tell the board everything wrong with their house. What are the things that just does not flat move the needle at all and is pretty much guaranteed to get an eyeball roll?
I see kind of basic landscape deferral is not really going to be very effective. You kind of need to really make it stick to kind of bigger ticket items that really impact the value. So like here's what works. Okay. If you have like a foundation issue, First of all, when we're talking about condition, it has to have impacted the value of the property on January 1st of the tax year. So in this case, if somebody were to come in and buy your house on January 1st of 2023, that would have to be an issue that would show up in an inspection report. Or if a buyer is walking through your property and they're like, gosh, this kitchen is really not dated relative to everything else, that would be an issue that would impact, that's really not a repair issue. That's more of just like a cosmetic issue. So as far as like repair issues go, it's like foundation, you have to have like a third party estimate with that. So like mold, things like that. Those are issues that really move the needle. What doesn't move the needle is like kind of the bad fence in the back. The fence that kind of is little issues, even though it's kind of like that does impact the real world. It's just, it's kind of normal. A lot of, what's considered normal wear and tear for a property doesn't move the needle. It's got to be something that's outside of what would be considered normal wear and tear for a property. If you want to kind of contrast, if you want to kind of show that your house is not updated, there's a few photos that I recommend showing, and that's kitchen, a front view of your house from the street. So kind of go to your neighbor's house across the street, take a picture of your house, take a picture of your kitchen, take a picture of your master bath, take a picture of your living room. And it kind of shows like the flooring and things like that. And those can be packaged up to kind of give the appraisal district a general sense of the interior condition of your property. And they could lower your value based on that information. And so that's kind of the easy route. One of the easy routes to go for a reduction is to kind of take those kinds of photos and see what they say. Sometimes you get pushback and say, well, this is kind of normal for the area, so we're not going to go with that. Or we have recent sales that show higher than that. So I'm not saying ignore the recent sales. In fact, Will and I, that's where we get most of our movement is in recent sales.
Totally.
But if you're going to do it, recent sales can be a tricky argument to make. You can, I'm not saying you can't make it, but I mean, if you're going to get to the level like Will and I are talking about adjustments and we're disagreeing with the appraisal district's adjustments, I mean, you got to be pretty skilled at doing something like that. So if you want to kind of keep it simple, you might go the condition route. That might not give you the most bang for your buck, but it could be effective and easy to do.
Okay.
Yeah.
Good.
Yeah,
So-
yeah. One quick axiom there to summarize, I think is important is like, think about when you go in to sell your home and what you have to disclose, right? Or what repairs, what the repairs addendum would you typically command, right? So these are things that
Yeah.
are outside of what is considered normal maintenance. Yeah.
Okay.
Yeah.
So when we're going to the ARB, we've got these typically 3 people on a panel. And so a couple of questions for each one of you on this. First of all, Will, where do those 3 people on the panel come from? What are the qualifications for the board? And are they really neutral the way they say they are? Who do they work for? Who pays them, et cetera?
Well, we all have our opinions of how the system should work and how it is currently working. And so I think to be without bias is probably maybe something we could all aspire to in all of our dealings personally and professionally, but so that's as soft as I can answer. As I wish that they were purely independent, but I don't think they are. However, they are educated. I mean, these are people that are appointed, and they're business professionals, and they're sometimes a lot of retirees and former CEOs, pilots, so.
But there's no academic qualifications, are
Police
there?
chiefs. No, I don't believe there is. No, sir. And but from what I find is that most of them are very well educated and kind people. They're trying to do the right thing too. But again, these matters can get complex sometimes. And if they do fall on one side, I'd hope that they fall on the taxpayer side. So
Okay. So I want to ask both of you something. This is something kind of new that they've instigated a couple of years ago. You can opt for a single member ARB. So Glenn, I think I've heard you address this, but I don't think, have you ever had a single member ARB? Where you just have one person like a judge?
I've done it. I wouldn't recommend that to a property owner. If you're a property owner and you're going to do your protest and you plan on going to the appraisal review board hearing, I would not opt for the single panel member. It's one of those things that I kind of feel out with the appraisal district. You got to keep in mind with agent, and this might be a point of I know this will actually probably be a point of disagreement with Will, which is great. That's why we wanted Will on here to offer his perspective also. My experience with single panel members is I feel it out with the appraisal district that I'm working with. And sometimes there's something to be said about making it easier to work with you. And if you're an agent and you're controlling thousands of protests like we do, and we're getting it through the system really quickly and efficiently, I think that affords us better results in the long run. I think the ARBs prefer that because they're moving faster. the appraisal district prefers that because they're moving faster. So for me, it's about speed. And I don't think I'm not sacrificing results in that from what I've been measuring. And in fact, I actually think I get better results in a single panel member, because what I've seen happen in the appraisal review board hearings a lot of time is there's group think. There's 3 of them there, and they kind of get coverage with, I don't really want to lower the value, or I don't really, want to lower the value, and this person doesn't want to lower the value. So they, in a group, they feel safe not lowering the value. Whereas if it's a single panel member, they've got to be they're the one and only decision maker. And I think that dynamic is removed. And I've
There's
actually
nobody
seen,
behind.
well, and it's anecdotal, but last year I had the same chairman and a 3 panel member one day, and movement sometimes, not movement other times. And it was in Dallas. So basically the appraisal district is agreeing to lower the value based on my evidence in the ARB hearing, and the ARB is just kind of agreeing with the appraisal district's new lower value. So we're getting lower value, but they're not disagreeing necessarily with the appraisal district. I had that same chairman in a hearing the next day, in a single panel member, and he's disagreeing with the appraisal district. So that's anecdotal from my perspective. I know Will has good reason for disagreeing with that. So Will, why don't you take it?
Yeah, I don't know if it's good. I mean, that sounds really great. I think it's kind of that 50-50 thing. You may land on a good one or you may land on a bad one. I think for me, our taxes sort of pay for this structure, and it's not on the counties to decide, what's right for them is best for all. That's a state right that's been allowed to us. And a triumvirate sort of mitigates that bias, right? Because then you get if they're doing their job and they're deliberating, on the record and speaking their mind on the record, then hopefully it's commonsensical, and and there is some level of reasonableness, to their decision. So you'd hope for that. But I think panels every day in our hearings are open and independent. I suppose I've always been more comfortable with the triumvirate just because I know the quality of evidence that I'm presenting, and I'd hate for one person to not consider that dutifully, and so maybe I think it's that I'm sure that they're going to catch on, and make sure that this doesn't get kind of glazed over, if there's more in the room. I don't know. I could see benefits to both, pros and cons to both.
Okay.
But yeah.
So we're down to
Hey,
about 6 minutes. So
Yeah, I wanted to
just
give Candy. Go ahead. You were saying exactly what I was going to say.
Yeah,
Go
I was
ahead.
going to say we're down to 5 minutes, so I want to get it just as concise as we can. But I got one more question on ARB, then we'll move off of that. Telephone hearing or in person? Will?
Yeah, telephone's no good. I mean, y'all, please, you just, I can only speak for me. And as a former appraiser, I'd go into those hearings and the people would be on the phone, and there would be, some evidence coming up on the screen, and it'd be all convoluted and all over the place. And there was no rhythm to it. There was no, climax, if you will, to the story. It was just discombobulated. And then there's no person looking at you in the eye. So when I was the appraiser and I had a board and a taxpayer, I'm sorry, when I was on that side and a taxpayer was come on the room, I mean, frankly, it's about, I'm doing the best I can do and you're doing the best. And if I disagreed, then he was probably going to lose because I'm the one in the room, showing and controlling sort of the flow of the argument as well. I just think you're at a serious disadvantage with a phone hearing. Absolutely.
Here's what I would say about that. If you're a property owner and you're representing yourself and you want to go to the ARB hearing, like half the people don't show up to the ARB hearing. And I think that's because you got to drive down there, wait in the lobby, and it's like a 3-hour ordeal out of your day. So if you are dead set on protesting it yourself, I think it's better to call in than just to not show up. It's more convenient. So I would, yeah, from Will's perspective as an agent, I totally get what he's saying.
Yeah.
If you're going to do it yourself and you don't think you're going to show, I would say the worst thing you can do is not show up for the hearing. The best thing you can do is probably show up for the hearing, like what Will's saying. But as a compromise, call in, do it from there. Don't just not show up to the hearing. So it's there as a convenience. So just keep that in perspective. Half the people don't show up to the hearing. Maybe some of those people can use a phone hearing and actually show up to the hearing that way.
Can I offer
Candy,
something? There's a lot of questions there. And what if we try to answer those questions and post them on Candy Sturt? Would that be helpful?
I
Yeah.
think so. I see 91 questions.
I know. No, we can like there's one that
They're
says,
going to be repetitive, I'm sure. But I think we
they'll
can
be
do that.
repetitive. Like, what
Let
if
me-
there's
let me
nothing
see.
wrong with my house or something?
Let me see if Will is okay with this. I know Candy's you're running for office right now, and you got to go beat the you got to go beat the streets right now, walk in your neighborhood. So if you're okay, I know that you gotta, and you're probably gonna be talking to your constituents about a lot of what we've been talking about in this webinar.
Yeah.
So if you need to check out in a couple of minutes to go do that, I'm willing to stay and answer some questions
Okay.
and Will, I know
Of
it's a
course.
busy time for us, Will. So if you want to stick around, we can answer some questions.
Yeah, happy to help.
Okay.
Again, if that's something that you feel like there's some really general questions that we can group together, we're happy to do that with you guys. And yeah, this is something, I mean, this is exactly what my opponent is crowing about is, oh, the biggest, tax cut in 40 years. And like everyone's dying because their values have gone up. So it's very disingenuous of politicians to say that. And if I do this when I'm on council, you guys can come beat me, okay?
Okay. That's right. We'll hold you to it. That's right.
So I
Well, we'll
saw
stay on a
some-
while here. Let me just
I was-
pitch out a couple of questions and Will, you and Glenn can jump on these, whoever wants to. We had a question about the allocation between the land and the improvements, and this comes up all the time.
Yeah.
Can you just protest the land or just protest the improvements? And how can your improvements go up in value when you haven't done anything to your house?
Yeah. Yeah, I guess I'll answer both and I'll go quickly because they're answering the call to the market and we know we're in a hot market right now. So even though you haven't done anything, the market's changing, market's increasing. With regards to splitting out the land, look, you can only argue total value, but part of that, as you know, when you make adjustments is adjusting for differences, and the land is certainly a component of that. So if they try to beat you down and say, we're not talking about the land, you tell them, Will said, well, a land makes up the value and you got to adjust for land value differences.
That's a big thing.
Okay.
I was seeing a lot of
Uh,
questions kind of specific to Dallas on condition ratings. That kind of speaks to a bigger thing is like
Yeah,
a lot of the advice that we give could be siloed on a per county basis because they all do it so differently.
Yeah.
So Dallas they measure the condition of a property through what's called like a desirability rating, or they used to call it a CDU rating. I think they've shifted their terminology in the recent years to desirability rating. CDU stood for condition, desirability, utility, and you're probably familiar with it if you live in Dallas. It's a gradient of like excellent all the way down to like uninhabitable. And the further you are able to move down, so like excellent, very good, good, average, fair, poor, very poor, and then uninhabitable, the further you're able to move down that gradient, it's going to get you 5 or 10% off of the improvement of the value of your property. The way that you do that is it's kind of funny. It actually goes into one of the questions that somebody emailed me, which was there's sales in my neighborhood that sold for really high, but they're still qualified as average in the condition rating. Well, I think that's because Dallas got hacked last year and in the fall, and they're behind in collecting data. And it happened in my neighborhood. There's properties that sold, for in the 600s, and they're on the tax rolls and on DCAD's valuation for like $450,000. So they're way off on the sale price. And they still have that same property that was totally flipped and everything as an average rating. Well, I'm an average rating also. And I haven't recently flipped my property like that.
Yeah.
And so what I would do is I would take pictures of properties that sold. Maybe you can go on Zillow or something like that, capture the picture, and then compare that to your house and just say, why is this property an average and why am I an average? And I want to be at least one, I want to move from average to fair, because it's not fair that this property is valued as an average and I'm an average when there's a clear difference between, this property just has a newly renovated kitchen and mine's 10 years old, that kind of thing.
that's it.
So
Yeah.
so
So-
side-by-side comparisons of photos of sales. Okay, you got to go, Candy.
Bye, Candy. Thank you.
Yeah. Bye,
Vote
Candy.
for
Thanks for
Candy.
hosting this.
Bye.
So
Thanks,
Thank
Candy.
we have a question about, can protesting ever backfire on you? Can they ever raise your value?
No, a lot of
Well-
people think that it's hard enough job, and I admit it, on the appraisal districts to do what they do, and try to get it right. They are not nefarious, they're not, I don't believe intentionally, they're not, they certainly don't hold grudges, in my opinion.
Well, legally they can't though, can they? Am I right
No,
on that?
of course not. I mean, legally, they have appraisal standards, just like any other appraiser is supposed to, they have to follow the ethics rule, and of course, and so we trust that, and
But
No,
correct me
but-
if I'm wrong, because
Yeah.
I thought in the tax code a couple of years ago, they passed something saying that the appraisal district or the chief appraiser cannot raise your value just because
That
you
was-
protested.
That was a part of Senate Bill 2 that passed in 2020. Before, it was kind of like this informal agreement that an appraisal district wouldn't do that. But then you saw Tarrant County one year, and it wasn't the appraisal district that was doing it. It was actually the appraisal review board was
Okay.
increasing values in a hearing. And what Senate Bill 2 said was that that's no longer legal. So there is absolutely no risk at all of filing a protest and getting your value increased anymore.
Yeah.
There's a law that protects against that.
Okay,
You wonder if that board member was a little biased.
yeah,
That's ridiculous,
So-
right? Will, I mean, to go in and taxpayers protesting their value and be like, oh, actually, we're going to increase your value. I mean, yeah, that speaks to, you're right. That speaks to sometimes the nature that an ARB member can have. I mean, that's pretty ridiculous. So
It is.
luckily there's a law right now that you can't do that anymore.
so we had a couple of questions about a topic we haven't covered, equal and uniform. I know that what taxpayers do, but I know it doesn't work. Would one of you want to take that and get into that
Yeah.
can of worms?
Well, stay away from the word taxes. Again, stay away from the word taxes,
Okay.
number one, all right? That's a universal rule, but what are we trying to do? The concept is ad valorem, it's according to value. We all trust that if I have a $300,000 home, I should pay about a third of what the guy who has $1 million home is paying, and that's fair and that's fine. That's a good, ever since the Romans, that makes sense, you know, and that's, we can believe in that. But when we find that instead that these are all cookie cutter homes, right? But here, I'm going to use it for this example, but his taxes are so much less. Well, that's because his appraised value is so much less. And you really got to get down to that. So it's as simple as this. If you want to try an equal uniform argument, you can use the same approach as you do if it's sales or something like this. But you need to consider those appraised values as the market value or as the appraised value indication rather than the sale price. So that's generally the best way to help people understand how to make that argument.
Okay. While I'm looking at the next question, Glenn, what do you think the two main takeaways from today's session are that you'd like for people to go home with today
Someone type
that we covered?
Yeah.
Will, are you there? I think Glenn froze up.
Yep, I froze for a second, but I'm back. I feel like I'm
Okay,
alive again.
go ahead and take that. I think Glenn's still frozen up.
Okay,
The
yeah, the main
main
takeaways.
takeaways from today's session.
Yeah, main takeaways for me is, again, I'll stick to my script here is, don't miss the deadline. Watch out for those offers. Do your homework, ask for evidence, get you some sales, make sure that you're making a good argument on sales, check out other appraisals as well. Look at the adjustments and be cautious of the appraisal district's adjustments, okay? But stick to 3 keys. Don't go off running on tangents. Case come into the hearing prepared with what your argument is, and what it's faceted on. Try to blow up their argument whenever they come at you, but mainly stick to your points. And I think we gave you those. Use some sales, use some E&U, bring some cost estimates, stuff that you'd have to disclose if you were to sell the property, and then remind them what the market's been doing, either through media or some kind of news source like that.
Okay.
I've seen a few people.
Good. I
I've
think
seen
you
a
were froze
people-
up there. Go
Yeah,
ahead,
I was
Glenn.
frozen up. I was seeing a few people that were asking questions about how do you select comps. I generally look for properties that, when they say, what do you mean by recent sale? Well, I mean, the date of valuation for property taxes for this year is going to be January 1st of 2023. So the closer that property sold to January 1st of 2023, the better. But you can go all the way back until April. But again, I would avoid doing that because that was the peak of the market. I would try to choose properties as close as January 1st as possible. Try to find properties that are, ideally within 10% the size of your property. Stay within your neighborhood if you can. Don't go 1 mile away. What can hurt people is if they just try to get the value so low and they negate their credibility to do that, then you're not gonna have people willing to work with you. If they know that you're going to, way across town to pull comps and you're going properties that are way smaller than your property to pull comps, or properties that are built by a different builder, maybe not as nice a builder as you, it's, especially if you're in Collin County and you're in some phased development, there's degrees of quality in those developments. Ideally you're choosing comps that are the same quality as you, same size, roughly same size, and it's sold, as close to January 1st as possible. Again, you can go back to April if you need to, but if you're going to go back to April or earlier on in 2022, make sure and adjust that sales price down, 10 or 15% to account for the drop in the market since then. So that's how we're going to be selecting comps. And for equal and uniform, it's the same thing. Instead of just looking for recent sales and instead of starting at a sale price, you're just looking at your neighbor's house and just, saying, well, they're a little bit larger than me, or they've got a pool and I don't have a pool. So make those same adjustments that you would make with recent sales. But yeah, that's how we select comps.
Okay,
Good tips.
Somebody's like, how many comps? Yeah,
Great.
three comps.
Great.
3 comps is good. In some counties we go 4 to 6 comps. In Dallas, I know they stick to 3 comps. Will, what do you think?
I think it's a good answer. I think from market, if you're looking at the market value portion of the protest, that's adequate. If you're looking at the equal and uniform, oftentimes a lot of calls that I get here, and I'm sure it goes the same for you guys too, but is my neighbor and this one guy, and it's like, well,
Right.
there's got to be more than one.
Right.
You got to be getting a bad deal, by at least 4. So sometimes when you make that uniform argument, you need at least 9 comps, and that's really where hiring myself or hiring a firm really comes into play, because we already have the data and the research, and we know what is going to be considered credible. So that's really the challenge of the taxpayer who takes this on themselves, or the mechanic that's trying to do this themselves, is you got to dive in and get all that data, land size, the age, the size of the home, and whether or not it has a pool or not, an outdoor kitchen, and you got to have all that ready and prepared so you can make a credible argument. And anyway, I'd say on market, you're good with a minimum of 3, but if you try to make a unequal appraisal argument, you better get in the 7, 8, and 9, or higher.
Oh, somebody asked, how do they get MLS information? Like, do they get it from real estate agents? No, it's not like it's from the MLS system itself. And there was a bit of an argument on that in Tarrant County. I know that the Travis Board of Realtors said that the Travis Appraisal District couldn't have access to the MLS system anymore, and that created a lot of issues for them. But it's not like your realtor is feeding data to the appraisal district. It's done through the actual systems level, the software level that controls the MLS system.
okay. I'll tell you, the takeaway for me today is it's all about graphs, and take advantage of the declining market. We have not seen this type of situation in the 30 years I've been doing this. And, we spent a lot of time on the graphs, and I think somehow, some way, you need to take your graph in there and make that point.
Yeah,
Because we're going to be showing graphs over and over and over again in our hearings. And I know Will is too.
you bet. Yeah. Yeah, I think that's huge this year. I think it's unprecedented, as you said, and it's ultimately an effect of interest rates. I mean, that'll be my main, my key or my anchor strategy is everybody knows that these interest rates spiked, and there's a lot of concerns about inflation. Well, that took the cost of mortgages up, and that slowed down a lot of transactions. So values fell, and it's as simple as that.
I know we have a lot of realtors on the call here, and I don't think there's a topic. I think we did not get to this topic, but I had it on my list. Glenn, I'm going to ask you to address this. The prorated homestead that passed a couple of years ago as part of Senate Bill 2, I think. In the past, to get a homestead exemption, you had to own the house and occupy it as of January the 1st. And that's changed. Can you explain that? And then we'll explain how that impacts the cap also.
Sure.
Go ahead, Glenn.
Yeah. So now it's whenever you purchase the property, like the percentage of the year that you own the property is the percentage of the exemption that you get. So right now the ISD exemption is $40,000. If you purchase the property in June, let's just say that means you roughly own the property for 50% of the year. That means you're eligible for 50% of that homestead exemption. So you get 20,000 off. So that means you don't have to wait until next year to apply for that exemption. You should apply for it right away. If you've not applied for the exemption and you purchased it last year, be sure on your homestead exemption form when you purchased the property and when you occupied it, because you could be eligible for a refund on that, because you should have been eligible for a prorated portion of that homestead exemption from the previous year if you haven't already filed.
Okay, so Will, let me give you an example. Let's say that I bought a house last summer, July 1st of 2022, and I paid $500,000 for it. Does that set my homestead cap for the next year for 2023?
No. No, it doesn't.
That doesn't sound right. Doesn't sound fair.
I
I know it's right, but it doesn't sound fair. Explain that. If you would.
Sure. So a homestead rides with an owner. Okay, a homestead is tied to an owner. And the appraised value for that tax year is established, as of January 1, like we've been talking about. But once that value is certified for that tax year, that will dictate the basis, if you will, that we're referring to.
Okay.
What
So
Glenn
put
was talking
another
about-
way.
Yeah.
Glenn.
Yeah.
It's just this is a lot to unpack. So I think
Yeah.
you've used described it a little differently. 'Cause
Yeah,
there's different
you're
ways to describe
You're
that.
not, yeah, I have a lot of, I mean, we get this question. This is the number one question we get in our chat system on our website. We have this live chat system and we're doing hundreds of chats every day. And the number one question is for people that purchased their property last year. So I bought my property in 2022. I thought my value could only go up by 10%. Why did it go up by more than 10%? And the issue is you're not eligible for the homestead cap. So the exemption and caps are two totally different. The homestead exemption is separate from the homestead cap. You're not eligible for the homestead cap the year after you purchase a property. So if you purchased it in 2022, your homestead limit is not, there's no homestead limit for you in 2023, meaning your property can go up by more than 10% in 2023, and likely it'll go up to what you paid for it. Because they got access to the MLS system, they're going to know you paid 500,000 for it. They're going to know that you were at 400,000 last year. The homeowner's expecting, okay, worst case scenario, I'll go to 440. The appraisal district says, nope, you're at 500. Homeowner's like, wait, I could only go up 10%. The appraisal district says, and this is not them saying it, this is the law. They're saying you're not eligible for that 10% cap the year after the purchase. So it'll automatically be applied in 2024. But if you just buy a
Okay, so-
property, it's going to go up to what you paid for it more than likely.
So if you bought a property in 2022, once again, 2023 is very key to protest that year because that sets the base for your 10% increase the next year. Am I getting that right?
Yes, because
Right.
another way to think about in summary of all of this is the tax, the first time that you've occupied the house as of January 1 ascribes your 100% residential homestead.
Gotcha.
So maybe if you had a percentage of it year before, well, that's not 100% and you haven't established your basis yet. So the first year that you were in the property as of January 1, that will determine your basis. And then it's a 10% from that every year thereafter. So the guys that are yeah.
Oh, I was gonna say, you can attest to this. People so in 2021, let's rewind a year. In 2021, we have clients that purchased their property and we're going in and they're showing closing documents and the appraisal district says, no, we're not going to lower it to what you paid because the market's gone up since then. Again, this was last year when we were just in the very hot market.
Right.
Well, conversely, this year, I'm going to be arguing that our clients should be valued lower than what they paid for it.
Absolutely.
Because the market was declining. So it's the reciprocal situation that we were in last year, and the appraisal district had no problem at all denying people their purchase price last year and saying your value is higher than what you paid for it. Well, different story this year, complete opposite story this year. We're going to say they need to be valued lower than what they paid for because of the declining market.
Yeah, in all fairness, we've been kicking around the appraisal district's pretty good. I have seen several cases in Collin County where the appraisal district has valued the property at less than someone paid last spring. So I think they understand this. Whether or not they'll agree with our time adjustments, I don't know. But I've seen enough cases where, at least in Collin County, where they have sent a notice value at substantially less than what the property sold for in early 2022. So that's some good news.
Even before last year, you'd always hear this stuff about how, well, that sale was early on in the year, and these sales are later on in the year. Well, I'm certainly going to offer that in every county. In every county, I'll be saying, you always tell me that. You always say this one's later. Well, these are later in the year, so you need to be paying attention to these, I'm going to hammer that for sure.
Okay. Guest, is there anything that you wanted to cover that we haven't covered?
Somebody came in late and asked us to announce who we were again in our companies. I'm Glenn Goodrich. I'm with propertytax.io. And we represent residential property owners protest their property tax. Will, you go.
Yeah, thanks. I'm Will Wiggins. I'm with North Texas Property Tax Service. Same thing. We commercial and residential services for DFW.
Yep. All right. Well, what are your concluding thoughts, Will?
Yeah, now that we're at the end, I get to throw my 2 cents into the jar. The monikers are frustrating me, as you know, guys, and so it's the appraised value. The homestead limited value is the appraised value, and it's on every notice of value, but it looks different on the different websites, and I think it makes people confused, assessed and limited and taxable and blah blah blah. But the one that most people care about, of course, is the homestead limited value, which should be dubbed the appraised value. So that's my 2 cents.
I think we need kind of like a get out the vote effort for protesting. We're preaching to the choir here. If you're attending this webinar, you're showing a high interest in protesting your value. What I would hope everyone would do is go on your neighborhood online pages, like Nextdoor, your Facebook community group, even just conversation, good old fashioned conversations across the yard with your friends. But get more people involved in this process. The appraisal districts are rubber stamping a lot of values, and the appraisal district has an important role. We respect the appraisal district, but we need to be involved in that. More people need to be involved in that process. So if you're part of this, please help spread the word to your neighbors, encourage them. If you can offer advice to them, do that also. Yeah.
Will, is that slide of yours showing up there?
Sorry, Glenn.
Is the slide that you
It
prepared?
is.
about
Yeah, look, there it is. Yeah, you bet.
Yeah, so if you didn't cover everything, just feel free.
Oh, well,
jump
thanks.
in.
I mean, yeah, we don't have to get, I mean, this is the DCAD website and the Tarrant website, Collin website, and the Denton one. You see on the Denton and the Collin, they're calling the appraised, and the appraised is the same as the market. And meanwhile, they're calling the homestead limitation the assessed value. Well, that's inaccurate, because if you look at the same two counties, Denton and Collin, if you look on their notice of value, the assessed value is the appraised on the notice of value, which again, I just think it's confusing. I don't think they should do that. I think you should keep it consistent is all I'm saying. But if you look at Dallas and Tarrant, they both got it right, that at least, well, Dallas is a little bit guilty too, because on the Dallas side, it just says capped. Okay. But if you look at a Dallas notice, it says appraised capped. Right.
Yeah.
And then of course, Tarrant, they have it right as the appraised is the capped value. But that's it. I just get a lot of calls, a lot of people throwing around a bunch of different words. And the truth is that the homestead limitation, that limited value, that 10% limited value on all 4 counties, if you look at the notice of value, it's called the appraised value. And that's the way it should be. Yeah.
Okay. Well, I think anything else, Glenn? Before we wrap it up?
No, thanks
Okay.
everybody for attending. Again, we are open for business. I know Will is too. So just come and chat with us, or Will, how should they get a hold of you?
Yeah, easiest way is go to our website. All of our emails are on there. You can email me there. Easiest way to sign up is through the website. And
What is the website domain? The domain?
Thank you. It's 5 letters. It's tough. It's NTPTS. That's Nancy, Tom, Paul, Tom, Sam.com. We'll be happy to help
So
you.
that stands for North Texas Property Tax Service, right?
You got it. Yes, thank you.
And my website is the same website that you're seeing on Jim's background throughout. It's propertytax.io. So not .com, but .io, propertytax.io.
All right.
And
Shelby, anything?
And no, I was going to say thank you so much both for attending, giving all this information. Thank you, Jim, for moderating, kind of roping together all of the questions. And according to the questions, there are a lot more that we haven't answered. And so I've been replying that we are going to tap the gentleman to answer as many of these as possible. And we'll include any duplicates, kind of combine them, but we'll like to post all this content on candysdirt.com with including a recording of this webinar today. So I hope you guys got some value out of it. If you have any feedback, please let us know. Feel free to email us. My email address is shelby@candysdirt.com. I'm associate editor, and I'd love to hear from you. So thank you guys all. Thank you, panelists, and thank you, attendees.
Thank you.
Thanks, everybody.
everyone.